tune, dance to the beat of the dead balloon. Find a rise, find a rose. Currency flows where the data unfolds. Find a rise, find a sing. Money moves on invisible strings. Find a rise, find light, find a room. Currency flows where the data unfolds. Find a rise, find a sing. Money moves on invisible strings.
Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hello, everyone. This is Kathy. If you can see me, you can hear me, give me a thumbs up, say hello. Let me know that everything is working and it's looking good. Give me a thumbs up. Let me know that everything's going well. Let me just raise my chair a little bit. Good morning, Jim. Good morning, Mark. Good morning, Cheryl, Andy, Ayato. Hello, everyone. Good morning. Wonderful. Wonderful. Where are you guys tuning in from? Let me know. Let me know where you're coming in from. Let me know what you're trading. Boris is freshly back from Australia, Melbourne. He was in Melbourne throughout most of last week. So he's going to be joining us later today and later this morning. And he'll be, we're going to be rolling from talking about the top 10 things to watch in the markets this week into live trading gold, live trading NASDAQ, and looking for the opportunities in the market. Okay, LA, Dubai, Toronto, Canada, Kenya, Bulgaria, Pittsburgh, Brooklyn, Spain. Looks like we've got everyone from all around the world on Instagram, from Germany, Texas, Nigeria, Houston. We got 2 people from Texas here. Wonderful. So yes, we will be talking about the top 10 things that are going to be moving the markets in this very, very short trading week. So it's a unique trading week. U.S. markets are closed on Thursday. It's a Thanksgiving holiday, but that does not mean that it's going to be a quiet trading week, because we do have 10 things to watch. And that's what I'm going to break down for you. Hello, everyone. I'm Kathy Lean with BK Traders. If you are brand new here, we always want to give you a little bit more love. So let us know in the chats that you're brand new. This is your first time on my Monday Market Buzz stream, and I'll make sure that we pay a little bit more attention to your questions. The reason why the Monday Market Buzz is so important and why so many of you join us is because you understand that it's important to be prepared for the trading week. The markets reward those who are prepared and they punish those who are not. And there's some very, very important things that I'm going to be talking about in order to make sure that you are not caught off guard by some of the possibilities in the market. So we're going to walk through, as I said, the top 10 things that you need to be watching in the markets this week. So let me know if you're brand new, and we will get into it. And I'm going to set you up for the trading week. Then Boris is going to join us, and we're going to roll into live trading on the NASDAQ as well as gold. So as I said, there are 10 things to watch this week. And I want you to take a wild guess. I like for these sessions to be interactive. So type into the chat, what you think some of those things are. And let's see if we can come up with that list of 10 together. Now, I know that some of them will be obvious, some of them less so. So I'm going to start typing in what you think are the things to watch. And I'm going to share my screen. We're going to create this list together, and we're going to talk about the 10 things to watch from the markets this week. So start typing in. I will share my screen, and we will go through what it is to watch. And let's see if we can come up with the top 10 list together. All right, I'm going to work on sharing my screen right now. Wonderful. So let's go through this. 10 things to watch. We've got some things already here. Let's see. Fed news. So we're going to start by saying top 10 things to watch this week. All right, number one. Let's move this over a little bit. Number one, I see my friend who is this, Nicholas, news from the Fed, and Peter, who I'm assuming is going to say the Fed beige book. Yes, the Federal Reserve and what they feel is going to be very, very important. Number two, many of you, Anil and Martin, are saying yen intervention. Yes, that is one of the biggest risks in the markets this week, and we will break that down. Three, we have retail sales, of course, U.S. retail sales. Finally, a piece of data that matters. What else do we have? Core PPI. All right, we're going to come up with a longer list than 10, I guarantee you. Australian CPI, UK budget, RBNZ. We're getting there, my friends. What else do we have? 8. Come on. What else do we have? 8. What else are we watching this week that could potentially move the markets? I know we got some very smart people here. On Instagram, you're saying CPI for sure, government information. What else do we have that's potentially going? CAD GDP, yes. CAD GDP, this is the quarterly report. So this is much more important than usual. What else do we have? Let me start to fill some of these in. All right. What else do we have? Let's see if any of you guys are missing anything. We have something that is usually not, hasn't in the past been as important, but we will get jobless claims. The job market is front and center. So on Wednesday, we're going to have the jobless claims report. Rana Juktapa, we've got the UK budget right here. We're missing one, my friends. Let's see. Ukraine, Russia, okay, that's the peace deal. So I actually have, that you're absolutely right. Peace deal. Ukraine, but there's one more. One more. These are the top 10. The last one we probably won't really get until the end of the week, and we probably won't really get until Monday. But take a wild guess. What could it be? Chinese PMIs are important, but they aren't very, very market moving for what we trade. Consumer confidence is important as well, but I would say that retail sales is more important. And in many ways, core CPI, retail sales, consumer confidence, they're all coming out around the same time, and I think they're all pretty much the same. So the last thing is, let me move this over. So we already got our 10 things to watch. And then the last thing that I want you to be watching, which won't really affect anything, until Monday is Black Friday sales, because, really consumer spending, retail sales, and whether that holds up on Black Friday could very much determine where everything goes next. So you guys are so smart. We've come up with the top 10 things to watch this week with a couple of bonuses. And yes, Tokyo CPI is important for Japan, but not as important as the number 2, which is yen intervention risk. And this is not in the order of importance. This is just kind of what I read from all of you on the stream. But the top 10 things to watch with some bonuses are all here. And let's break it down in terms of what's the most important, what's moving markets, and what you all need to be watching. So first off, there's no question that what the Federal Reserve does in December is what everyone is focusing on. And that's really the main reason why stocks were up on Friday, and the main reason why stocks are up today, stock futures, that is. And also why the dollar, for the most part, it's mixed, but still up against the yen, and it's holding fairly strong. And the reason for that is because, everything that we have, or not everything, but many of the things that we have on this list, like US retail sales, consumer confidence, inflation, the beige book, the jobless claims, all of that is aimed at answering one question. And that question is, what do you guys think that question is? I love interaction. I don't just like talking to you. I want to make sure, this is so important because I want to make sure that you guys are all absorbing this and paying attention. The beige book, the retail sales report, consumer confidence, core CPI, jobless claims, and even Black Friday sales. Yes, Paolo, the first one to answer, it answers the most important question, is where interest rates will go. Will the Fed cut? Will they cut interest rates in December? This is a very handsome picture, Jeffrey. Okay, so we like to look at the CME Fed Fund futures. Whenever the market talks about what is priced in for the Federal Reserve, every single week, day, month, it's all based upon this. It's all based upon the CME Fed Fund Futures Watch tool. So it has changed, and has changed dramatically, which is why we've seen so much uncertainty and volatility in the markets. Right now, the way to read this is that right now, the current interest rate is 3.25% to 4%. And so the market is pricing in 24% chance that on December 10th, this is what this is, on December 10th, interest rates will remain at 3.75% and 4%, and a 75% chance that interest rates will be dropped by 25 basis points. This is a huge dramatic shift, because if you look down here, 1 week ago, the market was on December 17th, the market was 50-50, 50% chance, and maybe a little bit more than 50-50 in favor of no change. And then a 42% chance in favor of a interest rate cut. So these odds have gone all over the place. And these odds have shifted so dramatically. And it tells us one thing, and one thing only, which is that the market has absolutely no idea. Yes, on Friday, first, before even Friday, the last time we heard from the Federal Reserve, we know they told us it was a close call. One person voted for 50 basis points. One person voted for nothing. The FOMC minutes told us that there's a huge amount of division. So this impacted everything. This impacted stocks, that led to this huge drop in stocks, led to this huge downtrend in the MNQ, which is the NASDAQ that Boris will be trading with you later. It led to this huge drop in stocks. It led to this dramatic rally in the dollar. It even impacted gold, which pulled back because the Federal Reserve is not thinking about, cutting interest rates. But all of that changed, right? On Wednesday, as our friend Paolo pointed out, it only takes one person saying something. Now, Fed President Williams is the head of the New York Federal Reserve, which is has more voting power than some of the other, more sway than some of the other Federal Reserve presidents. And then on Friday, right before the weekend. He said there's room, he thinks that there's room for a cut. And as a result, that is explaining the rallies that we saw on Friday and the rally that we're seeing today. But the rally, it isn't huge. I mean, we haven't even recaptured Thursday's candle because really the market has absolutely no clue. We see that in the CME, Fed Fund Futures, and how it dramatically shifted in just a week. We see that in the price action, the markets. And I think everyone will agree in this room right now that, really it's a coin toss. And in many ways, the Federal Reserve probably thinks it's a coin toss as well, which is why all these things that all of you have helped me build, the top 10 things that are moving the markets to watch this week, all of it only matters for one reason and one reason only, which is to tell us whether we're getting closer or further away from a 25 basis point rate cut. So of course, some of these pieces of data is dated, so it's not as impactful, but it's all we got, right? It's all we got. So it's all the market is going to operate on. So on Friday, we learned that the non-farm payrolls report, if you were trading, job growth was better than expected. But the details of the report, like the unemployment rate increased, the average hourly earnings growth deteriorated. So, there was something for everyone in many ways. You can say that there was good, there was strength, and then there was weakness. The dollar, which initially sold off, rebounded on Thursday. Really, no one has any idea. So they're hoping that maybe this week, the data dump that we get on Tuesday and Wednesday can give us some clarity. And that data dump will come in the form of, U.S. retail sales, consumer confidence, core PPI. If we look at the calendar, it's mostly going to be tomorrow and Wednesday. We've got right here, PPI, retail sales, house prices, which isn't really that important. None of this really matters. And then on Wednesday, we have more data dump. We have durable goods, which is kind of interesting because durable goods is basically the how much people spend on big ticket items. We have preliminary, we have GDP, although this is tentative. We have consumer confidence, we have personal spending, personal income, we have the Beige Book report, we have jobless claims possibly being released. So all of that could be very, very impactful. So these are all of the things that we're watching. And then I'm also watching Black Friday and Cyber Monday sales because the retail sales data is late. The retail sales data is for September. So, that's basically, 2 months ago. Whereas for the Black Friday, we'll know whether or not the government shutdown, which has now reopened, the possibility of, some of the layoffs really stinging consumers is actually leading to weaker spending. And honestly, no one has any idea because if you remember last week, Target warned that sales were going to be weak. Walmart warned that sales were going to be strong, which, these are basically the same type of companies, Target and Walmart. And yet, one is saying they think spending is going to be weak. The other one says that they think spending is going to be strong, which tells you that no one has any real idea. And that is why it is so uncertain. And that is why the December interest rate decision is going to be so big because no one really has any idea. And this week's report hopefully will clear the air about that a little bit. What else? Number 2, yen intervention. Yes, my friends, you are so smart. This, if you watch my video from this morning, I talked about how this is the biggest risk for the markets. It's not going to be retail sales. It's not going to be the Beige Book. It's going to be yen intervention. On Friday, this move here in dollar yen was triggered by the government coming in and saying there's a material risk of an intervention. Now, there's something that you need to know about the Japanese government. They love to surprise the markets. They love to come in at times when liquidity is low. And the reason why is because they want to get the best bang for their buck. And guess what? This week, we have the U.S. Thanksgiving holiday. And because we have the U.S. Thanksgiving holiday, that means that we are not going to have much participation on Thursday and Friday. In fact, I would even say Wednesday night, New York time, my time Wednesday night, Thursday, and then Friday is going to be a situation where there's going to be a lot of less liquidity. Perfect environment for intervention. So the perfect environment for intervention. And so it could happen. And the reason why this is such a serious risk is because of the damage that it can do to the markets. Now, some of you may have remembered the 2024 dollar yen intervention and maybe the 2022 dollar yen intervention. For those of you that did not, I'm going to show you how significant this was. So if we look at 2024, the last time they came in was in July, but we're going to look at this whole period. And let's just make this August. And we are actually, I want to go the 1 hour chart. Hold on. I want to go the 1 hour chart to show you how serious this is for my yen traders, my Forex traders, because it's not just going to impact dollar yen, but it's going to impact everything. So let's just go to, I'm sorry, my mouse kind of crapped out right now. So I'm going to have to plug in my other mouse. But if we go to April, and then we also go to, let's just go to like August, all right? It's going to load up the 1 hour chart. So this is the last time they came into the market. Let me zoom into this. It's this candle right here. I'm going to get really, really zoomed in. And I want you to stare at this candle for a second while I plug in my other mouse. So give me 1 second. Sometimes, the mobile stuff doesn't always work out. So give me 1 second. So this is live, right? All right, I'm going to plug in my mouse and we're going to go back to old school here. No more, all right, where's this mouse? Here we go. All right, we got the real mouse coming in. All right, so now my mouse is working. So now you're staring at my screen. Here, let me move this all around. This is dollar yen. Look at this. This is 160, 162 down here to 158.60. So sorry, 157.40. So that basically a 500-point move in dollar yen in a matter, I can't go shorter term because my charts don't go that much intraday, but in a matter of probably minutes. And, certainly within 2 hours, you're seeing this huge drop, 500 points. That's a lot of pips. And then in April, which is the last time they came, April, May, which is the last time they came in before that, even, these little stealth interventions that they come in where they don't really tell us they came into the markets. You can see this. This must be Japanese intervention because 157.30 all the way down to 155.80. That's almost 200 points. Huge drop and pop, showing you that it can go both ways. But the real one I want to show you is the last time they came in for the first time, which would kind of be like right now, right? So right now, dollar yen's trading at 157. The first time they came in the cycle was when dollar yen was around 159.50. And then they came in around 157.50, which is around this current level. So this move, let's look at this, 159.50 down to 154, what is this, 155. So another 450 points. This one, 157.50 down to 153. So another 450 points. So I want you to appreciate this. 450 points of drops every single time the Japanese government comes in. Some really good questions here. What time of the day does this usually happen? Let's look at it together. So this is midnight New York time. This is 4 p.m. New York time. Let's go over here. I mean, maybe this is intervention, but I think it's a little messy, so probably not. But if we go back over here, this is definitely intervention. 8 a.m. What is this telling you? This is telling you that there's no pattern. Let's go to July 11th, 9 a.m., telling you that there's absolutely no pattern whatsoever. We have 4 p.m., we have midnight, we have 8 a.m., we have 9 a.m. In the past 4 times they're looking at this chart, there's zero consistency. There's zero consistency when they come in because they want to surprise the market. Why do they want to surprise the market? Once again, they get the most bang for the buck by surprising the markets. And that is why I think that this is the greatest risk this week. It's not U.S. retail sales. It's not the beige book. It's going to be the possibility of Japanese intervention on Wednesday night, Thursday, or Friday. When, pretty much everyone's not paying attention. I mean, the Japanese don't celebrate Thanksgiving, right? They don't celebrate Thanksgiving. They don't care. And so, that's the perfect environment that weekend for them to come in. Now, I'm not going to say that they will, but they very much could. I mean, they had an opportunity last night, this morning, when the Japanese markets were closed, but they passed on it. So they could very well use the US holiday as the opportunity to come in. So I think that this is, as we built our list, I think that this is the most serious risk for the markets because, on Thursday, UK markets, German markets, they're all going to be open, and so they can run their flow through all the other centers, and they can get the move going. So that is a very, very serious risk. So where are we up to? We talked about the beige book. We talked about U.S. data. We also have the UK budget and the RBNZ. The UK budget, that's single-handedly the biggest event risk for the pound this week. The pound has been battered quite a bit, and the UK budget is going to be a very, very big deal because, if it's not satisfactory in the markets, it could lead to a further move lower. Now, some of you asking at the level of intervention, it doesn't have to be 160, right? I mean, it could be 160 seems to be the line in the sand that everyone thinks, but timing is also very, very important. And they've done so much verbal intervention, and it's been not effective at all, that the only thing that they could potentially resort to is a surprise. And they do this all the time. Surprise is very much, part of their strategy because, once again, more bang for the buck. Less people in the market, the bigger the move, the more it spooks out traders, the more it stops out people who are long. And, what I find interesting is, let's see. I am curious, and I will tell you that I didn't look at this. Let's see if this had any impact on gold, because many of you trade gold. Let's see if it had any impact on gold. I'm just curious for my own intellectual purposes to see whether or not this had any impact on gold whatsoever. So let's just go to April 1st. I'm sure many of you may be curious like me as well, trying to see if there was any impact on gold. You know what? We should have done the 1 hour chart. So let's go back to the 1 hour chart and do this again. So we're going to do 2024. Let's just do 03, 2024, 08. All right, let's go. Did the intervention, let's start with July 11th. Just out of curiosity, did it have any impact on gold? Now, I did not look at this in advance. Ooh, look at this, my friends. Look at this. I guarantee you, this was 9 a.m., 8 a.m., 9 a.m. Look at this. If you're trading gold, you need to be watching dollar yen because huge move in gold on the back of the July intervention. Now, of course, one piece of data does not make a trend. So let's go to April to see if it mattered. All right, very good question, Mark. I will answer this in a second. April. Okay, April 26 was when they came in. 23, 24, 26. This was midnight. They came in. So, okay. This 1 hour chart. Where's this? Somewhere April 26th. I mean, I can't tell. It doesn't really look like it had any impact whatsoever. I think it was during this period right here. And so they came in then, and they also came in in May, right? Let's just look at one more example just to see if we as gold traders need to be aware of this. Of course, we as gold traders, we should always be aware of the risk. And you can see in both scenarios it is positive for gold, not negative. But let's just double check, all right? Because we're good practices. This is May 1st. May 1st at somewhere around 4 p.m., I think we said. May 1st. May. Ooh, look at this, my friends. Once again, it matters to gold. So, who's trading gold here? Raise your hands. Who's trading gold? I'm assuming most of you, some of you may be trading dollar yen, some of you may not, but who's trading gold? Raise your hand. Mark wants to know, what is intervention? Intervention is basically the Japanese government coming in and basically telling their banks to sell the currency or buy the currency. And in this case, the yen has been very weak. It's at its weakest level in 9 months, which historically is even weaker than that. So the only direction they want to do is they want to come in to buy the Japanese yen. So they want to come in to buy the Japanese yen and drive dollar yen lower. So many of you telling me you're trading gold. So even if you don't, why is Kathy talking about dollar yen? Why does it matter to me? Now you know why. I will be honest, I didn't look at this, but we are investigating this together live. And you can see that it may not happen, but if they come into the markets, the risk is going to be for a pop in gold. And, and maybe later on after the stream, I'll look at more examples. So you need to be aware of that. So what did Kathy say? Kathy said, Wednesday, Thursday, Friday, there is a serious risk of Japanese intervention. And if there's a serious risk of Japanese intervention, you as gold traders, what does it mean for you as gold traders? That means that there's potential for a pop in gold on the back of Japanese intervention. Why? Anyone? I'm sure someone's smart enough in this room to answer why. Take a wild guess. Why do you think that it is positive for gold? For those of you that follow me often, you will know that gold, and if you learn from me in my fundamentals course, my total edge, know that gold is priced in dollars. And gold has a very strong correlation with the US dollar. Yes, smart, Paolo. And I know that Tao is one of my students in the Total Edge course, who, Tao, you can tell them, how you feel. He told me that's better than any master classes he's ever taken. But the point I want to make is gold is priced in dollars. And therefore, the drop in dollar yen is positive for gold. And also, it's a little bit of, uncertainty and disruption in the markets, right? And when there's uncertainty and disruption, that tends to be positive for gold as well. So that was weird. So anyway, because it is negative for the dollar and the Japanese government is selling dollar yen, and then you're right, Damil, 100% accurate. The Japanese have a lot of their money invested in U.S. treasuries. So when they're selling the dollars, they're selling U.S. treasuries, which is driving. Let's walk through this thought process. All right, let's walk through this process. I love to annotate on my charts. All right. 1 second. Let's go through this together. So, got my trusty plugged in. Japan intervenes, right? So they buy, let's say they sell dollar yen, right? So that means selling U.S. treasuries, which means selling the U.S. dollar and driving, gold up because gold is priced in US dollars. So that's why for all of my friends here who do trade gold, Japanese intervention matters. We saw this together. Your question about silver, silver takes its cue from gold, right? I'm too lazy to go in and look at the silver impact on each day. You can do that yourself. But if we assume that gold is rallying on the back of it, then silver will as well. And you can do the same thing for US yields. Basically, if you want to write this down, we looked at this together. Let me just let me just tell you the dates, okay? What was it? July 11th, 2024 was the last intervention, followed by May 1, 2024, and then April 26, 2024. So I invite you to do a little work yourself. I can't do all the work for you. Write down these dates and look at on the 1 hour chart what it meant for what you trade. What it meant, maybe it could be MNQ. Maybe we could do MNQ. I don't know. It depends, whether you guys want to see that or not. But you can do that for US Treasury yields. You can do that for silver. You can do that for euro dollar if you trade euro dollar. You can do that for whatever it is that you trade. So those are the dates for the last 3 interventions and why it matters to you, to US traders. And so do you guys want to see it on MNQ, or you want me to move on to talking about the other stuff, the other risk in the markets? Let me know. Say MNQ if you do, say the other markets if you want something else, which just want me to move on, because this is for all of you to be prepared. In the meantime, I want to remind all of you there's a plenty of wonderful Black Friday deals being done by our sponsors. So definitely check them out. TradingView, 80% off. Apex is 80% off until end of day today. Make sure you take advantage of that. Think Capital, 25% off until November 27th. Blueberry, 30% off to November 24th. And then Breakout Prop, 2% off. This is the only discount they ever give. Apex is the #1 futures broker that we recommend. Think Capital, for anyone that wants to be trading Forex CFD prop, they're the ones that you want to consider. Blueberry is also a broker-backed prop firm, 30% off. And crypto, this is Kraken-backed. We all like broker-backed platforms. So Breakout is Kraken-backed. Bitcoin is going nuts. If you got an opinion on it, prop is the way to trade it, because then the most you can lose is your valuation fee, which is $50-$60. So make sure you use the code BKSAVE. So if you think Bitcoin's a buy now, the most you can lose is $50-$60. If you want to trade Bitcoin, this is, you probably should do it through prop and not your wallet or an exchange, because the volatility is so high. So take advantage of these Black Friday deals. Because many of them are expiring soon. So who wants to see MNQ together? Let's see. MNQ. Yep. Let us talk about MNQ while I drop this onto you for the links. So MNQ. All right. NASDAQ, which, probably for those of you that are trading the other products like S&P, US 30, it's probably the same thing. So let's look at it together. 2024. April 1, 2024, August. What's going on? You know what? It's not going to be MNQ. It's just going to be NASDAQ, because the contract doesn't go that far for me. So let's just do NASDAQ. Let's do NQ, and let's do the same thing for March. And these are the things that you guys can so easily do yourselves, and as you're learning the importance of it. All right, so we said July 21st, right? July 21st. Let's zoom in. I think it was 8 or 9 a.m., right? It's right over here somewhere. This is the market open, so I can already see. Look at this, my friends. Right around the market open, MNQ drops like a rock and sells off aggressively when the Japanese government comes in. But of course, we say that one stat is not enough. So we are going to look at May 1st. May 1st. May 1st. Ooh, look at this, my friends. That was 4 p.m., right? Look at this craziness. First, this is before they intervene. Basically it pops and it drops. The market has no idea, but eventually, it ends up dropping. But it pops and it drops. And then April 26th. I'm going to go back here because I always keep forgetting exactly what time it was. So let's just go back to April 26th. I think it was midnight. It was midnight, April 26th. So it was right around here, I think. It didn't seem like it had too much effect. Although on the close, let's go back and look at it for real. because I think it's important. April, and then let's change this to April. Let's change this to May. All right, so when was it exactly? So April 26th. This is when they came in. First, they probably came in to sell it over here at 5 a.m. And then it looks like they came in at midnight. I'm not wrong. It's April 29th. So right around the Sunday open, Sunday open is when they came in. So midnight on the 29th. So let's go back and do this. 29th. I mean, it doesn't look like it had much effect over here. So for NASDAQ, NASDAQ is all over the place. So it looks like for NASDAQ, it doesn't have any specific impact, but you do need to be careful because it could have an impact. I mean, we could just be a little bit more careful and do a little bit more analysis because the time before that they came in was in September of 2022. So let's just do a little bit more and see what happened in 2022. Okay. So they came in, you can see right here. When did they come in, my friends? Somewhere around, let's say, like 8 a.m. on Friday the 22nd. Let's remember that. 8 a.m. Friday the 22nd, and then 4 a.m. Thursday the September 22. Let me write this down, okay? 8 a.m. and then what is this? This is 5 a.m. Okay, so let's go to our NASDAQ chart. In 2022, all right, and this is the last thing we're going to do, and then we're going to move on because I know all of you are itching to trade with Boris. All right, 2022. All right, so the first one is I wrote down October 21st. We're going to be over here somewhere. So let's zoom in. This is a 1 hour chart that we're looking at. October 21st around 8 a.m. So around 8 a.m. they came in, they intervened to sell dollar yen. Ends up driving and does lead to the market opening very strongly on the open. If we looked at MNQ, that move might have been a little sooner, but unfortunately I don't have MNQ data, which is the futures market data, going back that long, but it probably led to a nice little pop in dollar yen. September 22nd, let's see as well. September 22nd, I have written here 5 a.m. and they come in at 5 a.m. September 22nd, 5 a.m. right around here. And it leads to not much, market opens, ends up dropping, not too much. So I would say MNQ probably not as much of an impact as gold, not as clear of an impact. There's no question that when we have when we have Ministry of Finance intervention, it tends to be a volatile day for NASDAQ. So maybe that's your takeaway. Maybe your takeaway is that when they come in, it's a volatile day for NASDAQ. Maybe you want to step aside. Or maybe, it tends to have a little bit of whatever move that happens, tends to have a little bit of continuation and you could ride it for a little bit more. But it's not as clear as the moves in that we see in gold and, of course, the moves that we see in dollar yen. So that's the biggest risk I see this week, which is Japanese intervention. Now, we also have some other things. The Reserve Bank of New Zealand is expected to cut interest rates again. And, I always like to build these beautiful tables when we have central bank rate decisions. And the RBNZ, they started the year with an interest rate cut. They're expected to end the year with an interest rate cut. As you can see from this table, there is, and I hope you see this, both red and green. So there's, it's mixed. There's some areas of improvement. There's some areas of deterioration. So while Kiwi, I think, is kind of a little weak this morning, I wasn't really yet. It's actually leading the slide. It's the weakest currency, but it doesn't say much because only 0.25%. This is expected to be most likely their last interest rate cut of the cycle. So the actual decision itself will be less important than the guidance. Whether or not they tell us it's the last cut of the cycle because inflation is actually upping at 3%, and that's not good. Or they say more could be done. And I think they could be done. I think they're done for now. And if they're done, that will be positive for Kiwi. and not negative for Kiwi. So even if the central bank cuts interest rates, it's very important to realize that it's the guidance that is key and not so much the actual interest rate cut itself. So going back to the eco calendar, let's just run through this quickly, and then we'll move to live trading. So German IFO weaker this morning, didn't seem to impact the euro that much because I think the market likes the possibility of a peace deal between Ukraine and Russia. And so maybe that's bolstering sentiment a little bit. Canadian profits not doing bad. And then tomorrow we have the big US data dump. We have US retail sales. We have inflation. Now, my BK traders, you all know it is important. It is absolutely important to know when to trade and when not to trade. So regardless of whether you're a BK trader or not, trading with me, I want you to answer in the chat box whether you think that you should be trading ahead of the US retail sales report. Should you be holding positions going into US retail sales? Yes or no? Come on, my friends. This is the most important thing to take away, which is that you have to know when to trade and when not to trade. So it's very, very important to know what's important. And yes, very good. Tao, Akasha, all my BK traders, you all know that tomorrow I am not going to be trading until after the US retail sales report. We're not going to be trading the Asia session ahead of US retail sales, or we're not going to be trading the London session ahead of retail sales. We're not going to be having positions at 6:30 a.m., which is when I trade, ahead of US retail sales. We do not trade ahead of US retail sales. There's only a handful of pieces of data this is true for. Non-farm payrolls, inflation, retail sales, Fed decision, and the first release of GDP. So we do not trade ahead of US retail sales. But even though this is kind of dated, US retail sales is less important than some of the other reports that we have. We have also Australian CPI tomorrow night. Tomorrow night's a big night. Australian CPI. I'm going to be trading at 8 p.m. So I will already have seen the Australian CPI. So I'll probably be taking some Aussie trades off of the back of that. I won't be trading New Zealand dollar until after the Reserve Bank of New Zealand's rate decision. But really, it's going to be 9 p.m. that matters, not 8 p.m. because the RBNZ guidance, which comes in the press conference, will be at 9 p.m. On Wednesday, we've got other stuff going on. We've got durable goods, preliminary GDP, maybe. I don't have that on my other calendar. Consumer confidence is coming out. Possibly personal income, personal spending, jobless claims. We also have Beige Book. That's going to be important as well. And all of this will be deciding whether or not, helping us decide and change the odds about whether or not the Federal Reserve is going to be cutting interest rates in December. And then we have New Zealand retail sales report. And on Thursday, the most important thing about Thursday, aside from it being Thanksgiving, is that it's my birthday. And so so I'm going to say Thursday is a big day because it's my birthday. But data-wise, it's nothing. And there's nothing going on until Thursday night when we have the data dump from Japan. We've got inflation data, industrial production, but really it's going to be Japanese intervention watch. This is when things, Wednesday night, Thursday, Friday, we're on Japanese intervention watch to see whether or not they'll come into the markets. We also have on Friday. So the week is kind of bookend with Euro data. We have German IFO in the beginning of the week, and we ends the week with German labor market data, retail sales data, inflation data. So Euro will be in play on Friday. It's the only thing that's going to move. But honestly, on the day after Thanksgiving, we don't get much volatility unless, of course, the Japanese comes in. Then it's going to be a very, very big day. But data-wise, we've got a bunch of Eurozone data, and we have the quarterly Canadian GDP numbers from Canada. So that's basically the outlook for the week. Technically, let's take a look at things technically real quick. I love to have my SMA meters up. And this SMA meter and our EMA meter, which basically shows you where we are in relation to all of the major moving averages, you can get completely free if you, buy one of the prop trading accounts from Breakout Prop or Think Capital. Only those two firms. They come completely free, and just send us your receipt and we'll activate the BK trend meters for you. And there's an EMA meter and SMA meter. You can see I move them all over the place. You can put them wherever you want. And they're completely customizable and tells you how strong the trend is. So you can see dollar yen is above all of the major moving averages. And this meter is basically a summation of that. So dollar yen, crazy uptrend. You know, we know from the weekly chart that the real resistance is up. There's some resistance up at this swing high here, which is basically the highs where it stopped here at 158. But the real resistance is probably going to be right above 160 at 160.23. Uptrend remains intact, but we haven't recaptured this candle yet. We're on intervention risk. Until they come in, it's going to be dollar yen up. When they come in, it's going to be very slippery and fast down. Euro dollar, you can see 1D chart below all of the major moving averages, except for the 200. That's kind of the line in the sand. So we're still ultimately bearish, but some of the short-term indicators tell you that the fact that there's some green tells you that it's not a convincing drop lower. And so euro dollar looks like it's holding below all of these major moving averages, but we can still see a bit of a rebound, maybe up to above 150, up to 116. But support is down at the 200 SMA at 114. So I think it's really going to be a dollar story this week. And I think, I actually think euro is a little bit more risk to the downside than upside. Dollar Swiss looks great. I mean, look at dollar Swiss. It's above all of the major moving averages, lots of moving average crossover happening, and a lot of the short-term 5-minute, 15-minute starting to turn green. This looks really good. Looks like it wants to come up to around at least this swing high here, around 80, right underneath 82, and maybe even 82 itself. Dollar CAD also almost all green, but some of the short-term meters are starting to turn red, which is a little bit of a red flag. Bit of a flame out candle. Not so much CAD data going on until the end of the week. But so this looks a little, I don't like this. This is an inside day candle. I don't like inside day candles. What are inside day candles? Inside day candles are basically potential points of reversal. So be careful for a possibility of a little reversal in dollar CAD. Pound dollar, still downtrend. Nothing going on for UK except for the budget. And so, definitely sea of red here, and we have the possibility of pound falling even further, even though the 4-hour 28 SMA is turning green. Still, short-term meters are still very bearish, so I would not go long pound at all. Aussie, we are below all of the major moving averages, but short-term meters are turning bullish, so it's not so bearish. And Australian CPI, remember, Australian jobs was really good. If Australian CPI is hot, if we find ourselves back above the 200 SMA, it's going to be a much stronger reversal up to here. And then last but not least, the currency pair we have a rate decision on. We have the RBNZ expected to cut interest rates, but, it could be their last. And if it is last, then it is very much a situation where the short-term meters are turning positive. It actually could be a rally, not a sell-off. So make sure that you're aware of this. And this is kind of how you use the BMA. Look at this. The 15 minutes all just turned green. Tells me that, we're possibly getting an upside reversal in Kiwi dollar that could lead to a stronger move higher. So that's pretty much the key. And as I said, you can get those meters for free with a purchase of Think Capital or Breakout using our code. And so make sure that you do that, send us the receipt, and we will activate the meters for you. And their discounts, so there are a lot of Black Friday discounts ending today. This is early Black Friday. I'm sure they'll come up with more Black Friday sales, but you never know. Usually 80% is pretty good for Apex as well. And Think Capital, 25% is pretty good. Otherwise, any other questions? Any other questions? I'm going to drop these links to you later. I hope you found today's session valuable. Boris, do you want to come on and say hello?
Hey guys, hey. Look what I got, Kay. You like my merch?
I see, but it's very small, so I know what it is. I don't think anyone else can tell what it is.
Well, I can't. I want to make myself a little bigger. You can see it. It's really here. I'll show it to you.
Yes.
On
Yes, he's made himself. I like it, Boris. I like it quite a bit.
look in the back. Look in the back. Look in the back. It's nice too, right?
Oh, wow. I
that.
like it. What's my
Yes,
view
yes.
on the UK budget? You know, I think that that it's not going to be as satisfactory as the market thinks it will be, which could end up hurting the British pound. But I mean, it's more spending, right? More spending is not good for the currency. So we'll have to see. But overall, I think it's not going to satisfy the markets. Any challenge, Andy? Any challenge from Think Capital or Breakout Prop? They're the ones that we're featuring this week. Our sponsors, Think Capital, Breakout Prop, and we will give you the SMA EMA meters for free. So make sure you got to use our code, and you have to send us your receipt, and we will contact you on how to get your TradingView ID and activate you. All right. So awesome, guys. I hope you enjoyed today's session, and I wish you all good luck. I forgot to mention. So what you have to realize is that front of the week, there's probably going to be a lot of volatility. But come Wednesday afternoon, things will start to consolidate. And the only thing that could trigger volatility is the Japanese intervention. Otherwise, it's just going to be very quiet, thin trading, tight ranges starting from Wednesday afternoon onwards. But if there is Japanese intervention, we've gone through the charts, you've seen it with me, it could be quite treacherous. So make sure you are aware of that. All right, are you ready to go to live trade with Boris? Let me before we get started, let me say goodbye with a little bit of my music.
We'll fade out with the guys.
I need, Boris, people want our playlist. So
I know. I actually did some research. I'll be able to make the playlist. Just a little while. We're gonna make it, and we're gonna upload it to our YouTube channel. It'll be another good reason for you to subscribe to our YouTube channel. Okay? So we're gonna have a video that's gonna be like the playlist of the
because this song is called Fun to Rock. You all I'm
gonna do a little project over Thanksgiving, guys.
You guys are all here because you realize that fundamentals are important. All right, Boris, take it away.
All right, thanks, Kay. Hi, guys. Bye, Kay. We'll see you a little bit later. Hi, guys. All right, let me mute that out, guys. Okay, hi guys, hi everybody. Good morning. I got so much cool stuff to share with you. Give me just a second. I gotta put myself on screen here. Share my screen. Window share. I want to hang on a second. Let me just organize myself a little bit more here. Media assets.
Disco lights flicker and shine in the heat of the night. I got the moves, I got the groove. Trade the dots and watch me improve. Yeah. Trade the dots, hit the spots, fund the prop, make it pop. Money, money, money. Oh, it's hot. Trade the dots. Trade the dots. Spin that chart like a DJ wheel. Up and down, it's a funky deal. Risk is a dance, it's a balancing act, but I'm moonwalking on this market track. Yeah.
Hi guys, hi. I got so much cool stuff to share with you today. I'm gonna flip things completely up. I came from upside down or down under, and I'm gonna flip a lot of things upside down for you guys. We're gonna have a big conversation about everything that I learned in Australia, as far as some very interesting techniques for us to trade. And I'm gonna try and do this on a new eval that I started, and we'll experiment with this one and see how it goes. Let me. Why is this not working? Okay, hold on a second. Am I 180? Let me make sure. Okay, there we go. I'm short this. Let's put this over here. Okay, I'm gonna kind of play around with this thing right now. We'll see how well it works, and show you a couple of super interesting things that are very different from the way we've been scalping. We'll see if this is working. The key thing I learned when I was in Australia, something really cool, and something totally opposite of what we do. And I'll be the first one to kind of warn everybody, this is going to generate a lot more losses, but when the wins come, they're going to be huge. We're going to try something super interesting, because you guys know I always love to experiment with new ideas. We're going to add to winners. And let me explain to you how we're going to do it within a dot formation. That's going to be super cool. So here's what we're going to do. Right now we have one red dot or purple dot, which is the first red dot, and we have a second red dot, right? If this candle closes on a red dot, we're actually going to add a position to it. And then once we get the third red dot, we're going to exit our whole position. So right now what you see me is trading with stops only and no targets. We don't know where the target is. We're hoping the target could be big. You see the target actually super big. You know what? Fuck this. Market. I'm talking, and the market is really moving in my direction for a while. I could have taken the profit right then and there. It's fine. I'm going to probably show you a lot of losses today, and it's going to be completely immaterial, because the big principal idea of making huge wins is the important part I want to show you. In order to get huge wins, we're going to take some losses, and I don't care, because I just want to show you the idea in principle. Once you guys see the power of this idea in principle, it's going to blow you away. Now, this is the exact opposite of how we're trading, with short-term, highly profitable, highly accurate positions. And it's a way for people to trade both. I'm going to show you, we're going to trade one account with sort of like pure scalp ideas that we always do, and then the other account with just much larger, big targets using dots. So like, I don't have a dot right now, so I can't add. I only can add if I get a dot, if I get a second dot to the position. So I'm just basically watching, and I'm floating this position. My stop is above the first dot. So the idea is enter on the first dot, add to the second dot, exit on the third dot. This is a modified version. These guys, when they were doing it in Australia, they were just trading all the way to 10 dots down. Okay, they were making huge money, but we're not going to be able to, I think, hold on to such huge positions, or some of you may not. I want to give you a more structured entry exit structure that will help you manage. That will help you get some really big positions, but at a reasonable exit position. Because we all know that I can't hold on to winners for too long. But this was super interesting. As a completely different methodology, and I want you guys to watch it and see how it goes. Okay, so let's give it a shot here. I'm trading big contracts because this is the eval account. On my PA account, I will be trading small contracts. It'll be going from there. Okay. And you're going to get also a lot of back and forth. Like if I get a white dot over here, we're going to just exit the whole position. So you're going to get a lot of churn. Churn is just part of it. The idea is you're looking for these continuity strips, 2, 3, 4, 5 dots continuous. That's what we're looking for, right? Like right now, obviously, the trade is to the upside. I took the short trade because I thought we are going to have a little bit of a turn, and it looks like doesn't look like we're going to have much of a turn. So we'll flip ourselves around. If this white dot stays, I don't know how much time we have left over here. We have 2 seconds. Yeah, we're going to flatten ourselves out. I'm going to flatten, and I'm going to get the other way. I'm going to go big the other way, stay underneath this dot, and see if the market is going to turn around. Okay, and we're going to flip it around the other way. And you're going to see a whole bunch of churns. You don't have to do this with me. You can just watch me. The key thing that I want to show you is what happens when I win. Don't worry about when I'm losing. What happens when I win? Okay, that's the key thing. So we'll see if I can. If this market, we could be in churn city right now, so I could just be eating both longs and shorts for a while here, which is okay. Because the important part is I want to show you what happens when I win. Let me do this for a second. I don't know why this is. Every time I put this on here as a parameter, it never. I want the show down apply. Well, I think I want to save it. That's probably why, because I'm not saving it. Okay. All right. So 55 seconds left. Now, if I get a red dot, I'm going to flip back again. It's just going to churn me out. Fine, no problem. The market will eventually find, a full direction, and when it does, we're going to get paid. Okay, I got taken out. All right, first red dot here, 15 seconds left. All right, sell. Put myself over here. Now, if this is going to be a second dot, I'm going to add to that second dot. So into the first dot, add to the second dot, exit on the third dot. What I need is three dots in a row without a red dot. Box 16. So no ad. Oh, what happened here? Oh, did I get wiped out? All right, I got wiped out on this account. That's fine. Let's go to another account. Let's go to the 181 account. Okay, let me restart this. Okay, sell over here. I'm trading large contracts, so obviously this is going to wipe me out big time. But let's just go through here. Let's just play the game as I want to show you. So 1 dot, 2 dots, 25 seconds left. Let's see if I'm going to add to the position. Yeah, trading this with large contracts, it's obviously very stupid. But I'm just, I just want, the most important part is I just want to show you, and I want to switch around right now. Okay, nope, dot went away, so I'm not adding anything. So I'm just churning. The market is really churning, not giving me any. Oh wow, market is just not giving me any chance for a 3 dot continuity. Let's see. Let's wait. If I get stopped out, I get stopped out. I'm trading obviously way too large on large contracts here, which I shouldn't be doing. I'm using the stop as the red dot, which is a very large stop. So that's why I'm getting just wiped out on these accounts, because my stops are just relative to my margin are huge. I should be trading the MNQs. I'm trading the NQs. just because I wanted to see how it played out. The right way to trade this, honestly, is to trade it with a big trend, which is what I should be doing. I should just be buying, buying the longs and ignoring the shorts. But I wanted to show you the sequence. It's 21. As long as I don't get taken out on a stop, I'm not going to get out of this trade. But we'll see if this trade may wipe me out anyways. We'll see. Yeah. Yeah. All right, let's see where it goes. Market still looks pretty bid to me, but if this turns to the downside, that will be very positive for us. I don't think this trade is going to work out, but if it does give me a red dot, it's going to be, I think, a very, very positive move for us. We'll see. We're still chopping around here. Market is consolidating. We're still positive bid. The 200 still above the 800. The only thing I have going for me right now is slope is negative. Slope is red on the 8-period SMA. So maybe the sellers have a little bit more control. Maybe this was the top out move here in the market. We'll see. Um, I'm not confident either way right now until the market consolidates. As usual, the one thing I want to show you was continuity, and of course, the first half hour is just all chop, which is fine. We have to understand that we don't make the market makes us. So we just have to be patient until we get continuity. Now, you know what we're going to do is we'll switch over to like the 18 account right now on the MNQ. Okay. And no, it's already, all right, let's imagine I bought this. Oh, I'm on the 181. Jesus Christ. Where am I? Did I screw this up completely? Hold on. All right, now let me just stay on this. Let me just stay with this. Let me not change my tactics 1,000 times for you guys. I mean, I'm just frustrated because I'm just trying to find 3 dots in a row, of course, and we're not getting the 3 dots in a row to show you how to trade this. I started on the short, and now the longs are just taking over, and I should have been in the other account to kind of show you, but we'll see how it goes. So I have to stay very patient with this thing. Slope turned positive, also not great for this particular trade. It's just going to take me out. All right. So yeah, unfortunately, here's the three dots to the other side. That that would have worked really, really nicely to the upside. I should have just simply traded the upside account. Let's just be patient, and we'll wait for another 3 dot structure, and I'll show you how to add this. The idea was add here, exit on this one, which I couldn't do. All right, it's frustrating to show a new setup because, of course, I am contingent on the market going my way, and the market just did not go my way at all in any of this crap. That's why I was doing all the eval accounts for you guys, because there's no way I was going to do this on the PA accounts. I did this yesterday for my PA accounts when I was in the zone with the right structure. Okay, we will return to this when it sets up for us, and you will see the incredible power of this. It's rare, but it's really, really powerful. I just, I couldn't show it to you today in the way that I wanted to because I got myself caught on the wrong side of the markets in the typical 1030 chop that happens. Let me just see what MGC is doing, because MGC also had some nice moves here. See, 1, 2, 3, exit on 3. Honestly, the way to do this properly is just to do it on the micros, because it doesn't matter how small or big on the micros you get. Like here, let's do this on the micros here, on this one. I'm going to sell this. Where's my stop? Stop is going to be underneath here. Ugh, come on. Why can't I bring this down? The fuck? Okay. See, the hard part is the initial takeout, right? The hard part is finding the first dot that is the start of the 3 dot structure, right? When you're in Chop City. And right now, obviously, the first dot is the red dot. So you're hoping that this is going to be a turn. but it may not be. We may go back to the white dot structure, at which point you kind of go back to white dot, turns around, you get stopped out. I get stopped out right now. Wait for the next structure to happen, and so on and so forth. So it takes 3, 4, 5 times to kind of get yourself into the zone. Sometimes when the switches are really, really clean, like over here, boom, 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 it makes it really, really easy. But right now it's not. All right, here's a fun trade that we're definitely going to do in our real accounts. In my 18 account, I'm going to do this with a 20, 80 target. This is a fade I absolutely love. This is the second pull away fade. When there's 2 consecutive white fades like this, right? On the close, joint ask. Did I get in there? Boom, boom. Did you see how fast that was? Super fast. I'm trading that with a 5 target, 20 stop off the close. This is an incredibly high probability trade. So if you want to just scalp this out, like you saw me just take this out over here, it was super easy. You need two consecutive white pullaways or 2 consecutive purples. That's almost a guarantee that it's going to have some retrace off the top, and you can pick up that 5-point retrace off the top pretty easily. That's an easy trade off the top. And I know this is against sentiment, it's all that stuff, but it's a, you see how fast that trade was on my real account. Let me just see what MGC is doing. I'm going to go back to my eval account. All right, we're going to go back to my eval account, and we're going to see what's going on over here. If this gives me a green dot, we're going to try to initiate a green dot rally in gold, right? Gold exploding up to the upside in my 181 account. Let's see if this is going to put up a rally for us that makes sense. All right, I'm going to get long here. The stop is going to be underneath here. And then I'm just going to just wait. And if I get a second red dot, I'm going to add to it. And I'm just going to wait. And if I get a third red dot, I'm going to exit. I mean, third green dot. Did I say red dot? I said I meant green dots. Let's see what NASDAQ is doing. See, NASDAQ 1, 2, 3, just a really, really clean upside structure. This definitely, you guys are absolutely, the more I look at this, you're absolutely right that the way to trade this is only with a big trend. So, I mean, it's taking the shorts on against the big trend is kind of stupid. The big trend is where the dots are going to cluster the most. Like if you think about this, it's sort of just a basic idea. How many green dots are there versus how many red dots? You can see there's like probably twice as many green dots, which means the probability that that you're going to go up on this move is higher. Although, of course, this is the one where it's going to turn on me. We'll see. You just have to be very, very patient on this. Let's see if this is going to give me a second green dot. Remember, we're going to wait till the candle close, so don't jump the gun on any of this. All right, and I'm going to play, I'm going to do the exact opposite of what I said. I'm going to initiate a short sequence in NQ if the red dot stays here. Again, on just a guess that this is some kind of a, you know, at least a short term, maybe a full term turn if the red dot stays. You know, we'll see. We'll give it a shot. No, we're not even getting a red dot. Back to MGC. No, hold on. Let's see. Like I said, this is the do as I say, not as I do trade, because I'm going against trend here. The really intelligent things for me to have done would have been just simply wait for the green dots and just add to the green dots. But I'm kind of betting this might be a double top. So market. Okay, we're short here. Again, I'm going back up above the dot. Let's go to MNMGC. As this one has not given me a second green dot yet, right? Hasn't given me a second green dot, even though it's, you know, it's got a nice uptrend move here. So we're going to just wait and see if we can get a second green dot on this thing. No, it's just totally. I bought this late, so okay. Let's just go to MNQ. Okay, so MNQ, if this gives me a second red dot, I'm going to add to the second red dot. It's starting to drop. Big drop. I'm waiting for the close before I add to the position. All right, I added to the second position. I'm moving my buy stop all the way up here. Okay, and now I'm waiting for a third red dot to exit on. And you notice over here, I'm basically short 2 plus 31, 32 points, right? Like a pretty big, nice, pretty big chunk of P&L here. So again, this is like, you need continuity, and you don't get that a lot, but when you do get it, you get paid a lot. This is obviously not a trade to be, not a structure to be done with large contracts. This can only be done with small ones. And you get this, you know, you're going to get retraces, and you're going to, it's going to break your heart where it goes, minus 30 to plus 30. It's just part of the thing, and it's probably because I was trading against trend here, that it's just not doing a lot of continuity. But I thought we might get a full turn on the move here, which we're not getting. But it is what it is. This may be the. I'm going to show you every failed example of this and still be convinced that this is a great strategy, because obviously I'm just executing it very, very poorly today. But it is a really great strategy. Trust me on this when it works. And for those that want the very, very large payout, I mean, the idea here is that you're going to bleed, and then you're going to get paid very, 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 very large when it goes your way. Where's my MGC doing? This still hasn't. This is the funny part. This still hasn't even given me a second green dot. But that's working in my direction right now, right? So it's kind of interesting. I'm actually, what I'm going to do? I'm going to flatten out the gold. Just take a little profit here, not just because I want to focus on. I guess the NQ. I must have gotten killed on the NQ. No, I'm still on the NQ. I'm still in the NQ, but I'm gonna get tagged out on the NQ. So if this doesn't work, I'm gonna flatten out on this position. Let's just fucking flatten out. Let's flatten out. Let's go long if this is a white dot. Let's just align ourselves with trend right now and see if just trading to trend, this is gonna work my way to what I want to show you. No, there's no recording from AU. It was a private session, so you can't see it. And it wasn't live trading. It's just a concept structure that's really, really cool. All right, we're gonna do this. We're gonna do this the right way. I'm gonna go long trend in Nasdaq and probably get killed. It doesn't matter. Again, today is the day where I'm going to show you all losses, and I'm still going to be right, because it's still going to be a great idea once you begin to understand how it works. This, by the way, a very nice scalp too. This is a scalp structure for us in like a real account. So I'm going to buy this. Again, the stop is underneath here. The scalp here would be like just a 540 scalp. Oh, look at this. Look at this. I literally cannot win today. The market really, I'm just one step behind the market because the market, the big move is here. This is clearly the second wave. This is probably the consolidated wave. I'm late on every single buy here because I didn't align myself with trend initially, but we'll see. I'm going to stay patient here. Let's see. Maybe we'll put together a couple of green dots here. If you were scalping this would have P&L'd you. It went to +5 on this move. Guys, tomorrow, just want to let you know, we're not going to be trading live, but I will be trading live with guys from Prop. God, what are they called? Prop Firm Match. Prop Firm Match. I'm going to be doing a guest spot on their live channel, and I will be sending it tonight. I'm going to get the link from them. It's a YouTube link, so I'm going to be sending it to everybody. and you can come join us. And I'll be showcasing some of this stuff, plus of course the scalp techniques that we really are known for all day long. But I wanted to kind of we have a short week this week, and this is a super interesting idea that I wanted to put in there as a new idea for us to play with, because when it works, it's a super powerful idea. I'm just behind the 8 ball today, probably because my first day back on a desk, so I'm not reading the market as well as I should be, which happens. Yeah, it's just this. I'm running literally into the top of every breakout today. Just fucking unbelievable. Oh my God. Thank God I'm doing this on the evals. And this is why you want to get these, the 70, 80% evals. You want to experiment with an idea. You want to do it on the eval, not on your payout money stuff. This should never be, should never be doing this on the payout money. You should be doing this on the evals until you get the rhythm right, the structure right. I just can't fucking believe how much, how I'm every time I'm buying a breakout, it's a chop move. All right, let's see if we can the market lifts itself up. No, I don't think so. I think we're just chopping around. What you need for this strategy is a 5, 6, 7 candle continuity move on the slice, right? And you had one over here, which I missed. You had one over here, which was Kathy was talking, so I kind of missed the whole moves over here. You had lots and lots of them over here, even up to the downside, nice and clean ones. But now, I'm just getting ripped left and right the other way. Just fucking annoying. All right, I'm gonna go second. This is the second. I'm gonna sell this. I'm gonna show you that this will eventually fucking break one way or the other. So again, I'm just making a second double top bet. This is a second purple red. This fucker better be red on the next one so I can add to it. I can show you some continuity trades. Jesus Christ. Is the premium on TradingView worth it beyond the BFF? Sorry, what's the question? Hang on. Beyond the BFF, if just using essential, no intent to get trade evade. What I would do is look, TradingView right now, whatever you want to buy. You want to buy the essential, you want to buy the premium, you want to buy anything. This is the best deal is now. This is the only time of the year where you get a deal. The rest of it, I think the essentials are okay. It all depends on, how of a heavy duty. The main thing of like getting the bigger accounts is you can do more alerts on them. But if you're just using 1 or 2 indicators, the Black Friday deal, whatever plan you get is the best deal. So there's no argument that you want to buy the Black Friday deal. The only question is, do you want to buy the small one or the big one? I'm getting fucked left and right here, guys. Unbelievable. Unbelievable. Okay, next dot. We're gonna trade the fucking next dot. Unbelievable. All right, I'm gonna get long here on this thing. This is just Chop City for the last, this is literally the worst conditions for this particular trade. If this, by the way, if this goes down, fuck you, I'm selling this. Why is this not working? Oh, my second account got blown out. Look at this. I killed both of the accounts today. Unbelievable. All right, that's fine. I can't show you the the trade, because I'm definitely not going to show this to you on the real accounts. We can focus on just doing scalps, which I'm happy to review with you. There's a couple of really good scalp structures that I like. The most obvious one is, white on green, right? White dot on against a green slope for continuity, 510. Fuck me. This is all right. You know what we're gonna do? We're going to take if this is going to be a green dot, we're going to take a scalp on this. I'll leave it to you, Ben. I'm just telling you that, I know we always do the Black Friday deal on this. Wow. So we literally have had zero movement. And look at this motherfucker. Look at this thing. Now comes the second red dot. Jesus Christ. 18, 19. All right. I'm going to sell 2 here. Just assume if this is second red dot, I'm going to sell 1. And if this closes another one, I'm going to sell 2. We're going to keep it over here. I literally just got fucking clipped on the high of this thing. I'm going to show you. I'm going to sell 2. So now I'm 2 units on this thing. No, I don't want to do buy limits. Fuck. Sorry, guys. I made money on this, and that's not what I wanted to do. I didn't want to make money on this. I wanted to show you. The idea was short here, third short, and you would have made like 50 points. Really, I'm just really frustrated because the idea is so good, and I just haven't been able to execute it for you today on the price action. I got fucked on this little clip over here, which was just, the usual market thing, playing mind games with me. But if you're here, I got in on the. I'm not going to follow this trade here. All right, let's do this. We're going to do just one thing. Here's what we're going to do. I'm going to do a modified version of this just to give you an idea of what I want to do. So I'm selling this. There's no stop. There's no target, right? I'm going to put my stop over here. If I get a second red, this fucker better give me a second red dot today, because the market is just really ripping me apart. I will just exit on the second red dot. The principle that I'm trying to show you is to add to winners. Unfortunately, the market is just giving me dick all in winners today because it's literally red dot, white dot, red dot, white dot. Fucking, it might be doing it again too. And when you're in that, when you're in this chop environment, you just gotta grind your teeth, because this is where that strategy does suffer. But that's why if you trade it with small sizes, it doesn't affect you. Like in a proper way to structure this, you're only losing on one, because you're never adding until you have a winner, right? Fuck me. Just no continuity whatsoever. Wow. It's just, I mean, I don't give a shit, because, those were all evals. That's why, look at this. Look at this. Look at this market. By the way, flipping mindsets. If this is a white dot on a green slope, it's a perfect little scalp. You can do that if it works. Green slope, white dot, nice scalp. We're gonna just buy this market, see if it works for us on a. I bought it a little too early. Come on, and come on. Come on. There we go. Perfect little scalp. Look, guys, I can do scalp in my sleep, but anytime you try something new, it always takes. This is a good lesson of, like, when you try something new, you're going to fuck up 100 times. As a matter of fact, if you haven't fucked up 100 times, you haven't really tried something new, right? So this is very, very much against everything we do. I mean, I can do my scalps in my sleep because I know exactly how they work. Trying this particular setup, super interesting. It's super valuable, but it's going to take a lot of practice for us to get this right, which is good because I want to put more interesting ideas into the room. We know how to make money. We know how to make 5 points in our sleep. The question is, how can we make 50 to 100 points? Much harder proposition, but a much more interesting idea in terms of play for the market. So we'll keep trying. I'm going to give it one more shot. I'm going to buy this again with a sell stop underneath here. And if this fucker comes back down, that'll be it. That'll be the end. That'll be the last of my trading today. The idea here is, wait. I don't want to do the sell limit. Oh, shit. Damn it. You know what I hate about this? Okay, we're going to add, if this is a green dot, we're going to add a second position to this. All right. We've got 10 seconds left. It's a green dot. Better stay a green dot. I'm not adding unless it's a green dot. No, no add. Doesn't stay here. I need to put a stop over here for just to protect myself. Stop is underneath this white dot. And look at this fucker, it's turning red again. We don't have any continuity in the market right now. The market is totally chopping. We ran into the Monday morning buzzsaw. And so this particular strategy, I mean, the great thing about scalping is we don't give a shit. It's such a small continuity trade that it can survive chop like this. But these type of ideas that require 50, 60, 100 point extension need the continuity. And, and I'm just getting totally whipped by the discontinuity. But let's see. Maybe this is going to give me a second green dot. Come on, rally, you motherfucker. I want to try to see if we can, if they're hopefully they can take out the highs of the session, or at least the highs here, which means then they're going to try to run for the highs of the session. That hopefully will put us on the path towards more green dots. Didi, what are you saying? You got the premium so cheap on Black Friday because I trade this on second time frame. It's awesome. Oh. Yes. The potty mouth is continues. All right, come on, baby. Give me a green dot. Show me a second green dot. Show me some continuity today. Jesus fucking Christ, break this out. This is the 10:30 move, right? We hope that this is the 10 o'clock consolidation, the 10:30 move. Can we run this? Can they run this to 24.8? That's all I really need. Just run it, baby. Where are my buyers today? All right, second green dot, $1.28. Better stay there. Let's see if it can stay there. Yes, the Apex allows you not to use. You can no. They want you to use a stop loss. You don't have to use a take profit. The stop loss is important because they want you want to protect your risk. This is very very much. If you can do this right, Apex would love you. They love this kind of strategy. They love the open-ended strategy. They want you to control your risk and have absolutely unlimited upside. And fucking fortunately, you need continuity to get the strategy right. And today is just, I mean, I did a lot of things wrong here today. I'll be honest with you. I traded the shorts, which I should have never done. This strategy, you should only trade in the direction of the bigger trend. So I should have only traded longs. Even if I traded longs, I would have been clipped only once instead of twice on the on the shorts. I got clipped 2 or 3 times, right? So the idea is you want to trade where the preponderance of where the dots are. That there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 red dots, 10 green dots against only 3 or 4. 1, 2, 3, 4, 5, 6, right? 6. Still, that's the whole idea of trading with trend, where you get the bigger dots. And now you get this bullshit also, where the fucking thing is running, but not giving you any dots because the continuity is just so limp. It's kind of moving up, but at such a weak point, they can't hold the highs. Right? Come on, break the fuck out. Take this out. Come on, get the fuck up. It's 1 to 5. Sorry, Ben. What are you saying? 1 to 5? Oh, stop the target. Yeah, but they don't care about. They only care about the stop. You don't have to have a target because the target is going to be your P&L once you finish it. All right, we got a minute, 59 seconds. I will blame jet lag. Yeah, well, no, it's not jet lag. I'm really not tired, so I can't. There's no. The only excuse is it's a new strategy, and there's no. It's not like you don't need an excuse. You need to understand you're gonna fuck up. The whole point is yes, you're gonna fuck up. Don't if you want to try something new, you will blow it 100 times. That's the difference between people who succeed in the game and the ones that don't. The ones who succeed don't give a shit about losing 100 times. The ones who fail care if they lose once. Don't be a pussy. Understand that this is a good idea. Just give it some time. 10, 11 seconds in the trade. 7 seconds. I'm going to be a buyer here. Buyer. Okay. So now my sell stop goes on. Sell stop still underneath here. I'm going to try and exit on. Oh, fuck. Ah! I forgot I had to take profit on there. Fuck me. I took profits totally unintended. All right. Anyways, you get the idea. I should be right now on this third trade. Well, you know what? I'm going to just take my profits on this third trade. Fuck, I forgot that I had a scalp on that. This should have been open-ended. If I get a third dot here, the way it's going, it's not even going to give me a third dot. This piece of shit product. Fuck. All right, let me see if this is going to give me a. The problem is that I had the scalp conditions on here, and my take profit was clicked open. So I took a short profit when I could have taken a much bigger profit. All right, let's see if this is going to give me a third dot here. Come on, just trying to show you the principle of the idea. Motherfucker, I cannot win today. I'm barely breaking even on this account, but that's okay. Come on, give me a dot. Give me a dot. No. All right, fuck this. I'm gonna flatten out. You get the idea, even though you don't get the execution. I'm just, I just wanted to kind of make sure that I was okay on all my. Oh, look at this. I have a tiny little loss on this. But look at the P&L. I was going to tell you, this was this account. This one was I scaled in yesterday properly at the beginning of the Asian session, and it worked like a charm. And I just, just today, I'm really behind the eight ball. The most important part about understanding this particular strategy is that you got to trade with a larger big trend. Had I been with a larger big trend, I would have been stopped out here, but I would have been in on this trade, in on the second trade, and now would have been out on the third trade. I just didn't have any patience. That's interesting. That's actually a good question. That Ben is saying he's wondering if 2 minutes is that's an interesting question. Well, how would it? That's an interesting question. Let's put this on a 1 minute. Huh. That's an interesting insight, Ben. Huh. I think Ben is onto something which I hadn't even thought about, which is that this might be a much better strategy. Oh, look at this on the 1 minute. By the way, look at this fucker. But after I gave it up, it finally came up. But if I came in here, got out here, you're coming in at 34, 41, out at 60, right? Really nice. That's a good idea, Ben. I think you may have the second component of this whole thing, which is one, trade to trend, two, trade the 1 minute. If you add it on the 1 minute here, 1, 2, 3, really, I think you're right. I think I was just trading in on the 2 minute because that's just our natural scalp structure. But when you're adding to positions, because look at this, 1, 2, 3, really nice clean adds. Okay, so I think Ben gave us a really good idea of how to do this going forward. I wonder how this looks on the MGC too. Uh, 1, 2, 3. Yeah, I think you're right. I think maybe this is the way to do this on the way the way to do this. Let's try this on let's try this in a 1 minute on gold. We'll try it in this account. That's fine. Just again, trading it small. No take profit. Stop over here. 36 seconds. Let's see. First green dot, and then we'll see if we if we can get continuity on this. Let's just give it a shot on the 1 minute before I go. 26 seconds left. All right, I'm long this, right? Stop is going to be underneath this green dot. Now, oops, hold on. Yeah, okay, that's fine. Okay, 13 seconds left, second green dot. If it stays, we're going to add to that. Got to stay though. Let's just wait for the candle to close. Okay, in second green dot, sell stop moves back up underneath here. Now we'll just try to wait and see if we can get a third green dot. This is what I'm going to do, guys, because I want to look at a NASDAQ. I want to put a this is going to turn into a green dot if it's there, and we're going to sell 2. Okay. If I can exit on a third green dot, it'd be great. Let's see where MNQ is doing. Look at NASDAQ. NASDAQ is just running, right? Just running. Really putting that strong breakout move that we talked about. So yeah, you know, it's totally viable as an idea. I just executed it poorly. I don't know what I'm going to get if I'm going to get the move in the MGC yet. We'll see. It looks like it's kind of stalling on me, but the concept is really cool. All right, you know what? I'm gonna flatten out. Just not my day today on this idea. Everything I showed you worked great, but I just couldn't participate in any of it. So 1, 2, 3 on here, using 1 minute would have been great, right? 1, 2, 3 over here would have been great too. Just simply not getting this executed as I wanted to. Guys, I will have the link tonight for the prop match. Oh, I'll probably just be doing our usual scalps there. Our usual scalps are very clean and good. But I did want to, I was so excited about this idea. I'm sorry I didn't get a chance to really play it out the way I wanted to. But I hope you guys get the principle of it, because we're going to do this until we get it right. And then you guys are going to be able to put together 50, 100, 150 point moves when this thing hits properly. So we will do this. I promise you. We're just gonna take a little while to get this going. Anyways, everybody have a great day. I'll see everybody tomorrow. Take care.